Hi, welcome to ArkIntel. Today, let's talk about Starbucks, the brand that defined coffee culture worldwide. From its iconic green siren logo to the bustling cafes in nearly every major city, Starbucks has been a global powerhouse with over 38,000 stores and nearly $36 billion in net revenue. Is this global icon on the verge of losing its magic? Cracks are beginning to show. Could this be the beginning of the end for this coffee giant? Is Starbucks, the ultimate coffee experience, losing its magic? As we dig deeper into the numbers, the competition, and the internal strife, you might be surprised to discover just how precarious their situation has become. Stay with us as we uncover the truth behind Starbucks' unexpected downfall and what it means for the future of your daily cup of coffee. For years, Starbucks was more than just a coffee shop. It was an experience, a status symbol, a daily ritual for millions around the world. Investors flocked to it as the company's stock soared over $125 per share in July 2021. But as quickly as it rose, the tables have turned. Fast forward to 2024, Starbucks finds itself among the biggest losers in the S&P 500. The stock is down by more than 15% since the start of the year, leaving many to wonder, what happened to the coffee king? The answer lies in the shifting consumer behavior. Starbucks, once the darling of aspirational consumers who valued experience over price, is now struggling to appeal to a more value-driven market. This shift from a luxury treat to an everyday staple has left Starbucks scrambling to adapt. The company is making promises: shorter wait times, faster service, a more personal connection with the baristas. But the question looms large. Are these changes enough to reverse its downward spiral? Consider this. A company that was once synonymous with indulgence is now facing pressure to prove its worth to consumers who are increasingly watching their wallets. The very identity of Starbucks as a premium brand is being questioned. How did we get here? Let's delve into the numbers, where the true story of Starbucks' struggle becomes clear. After reaching its peak in 2021, Starbucks' stock didn't just tumble, it plummeted. Several factors contributed to this fall from grace, including mounting union tensions, relentless COVID lockdowns in China, and shrinking profit margins that eroded investor confidence. Despite these formidable setbacks, Starbucks was not ready to throw in the towel. The company outlined bold plans to reinvent its store operations, promising investors that growth was still on the horizon. Between 2021 and 2023, Starbucks managed to stay mostly on target, missing Wall Street expectations only twice. But 2024 has been a different beast altogether. The company reported 2 consecutive quarters of earnings misses, including a staggering $130 million shortfall in the third quarter alone. This wasn't just a minor hiccup, it was a seismic shock that left investors reeling. But numbers alone don't capture the full extent of the challenges. Operational headaches are also mounting. The Starbucks mobile app, once hailed as a convenience, is now showing cracks with high rates of incomplete orders. Customers, frustrated by longer than expected wait times, are abandoning their orders. Despite Starbucks' efforts to speed up service, sometimes reducing wait times to as little as 3 minutes, many customers are reporting that their waits are longer than ever. A striking 25% of visitors now say that their wait time has increased, up from just 16% 2 years ago. This growing frustration suggests that Starbucks, once a flawless system, may be just starting to fall apart. Could it be that the very innovations that helped Starbucks dominate the market are now contributing to its decline? And what does this mean for the brand's future? Starbucks isn't just facing internal challenges. The competition has never been fiercer. The landscape of the coffee market has changed dramatically, and Starbucks is feeling the heat from all sides. More than half of the coffee market is now controlled by small independent shops. These local cafes, with their artisanal brews and a personalized service, are luring away customers who might have once been loyal to Starbucks. But the threat doesn't end with the indies. In China, Starbucks has been dethroned as the largest coffee house chain by the fast-growing Luckin Coffee, which now has nearly 3,700 more stores than Starbucks. Luckin's aggressive expansion and competitive pricing have made it a formidable adversary, capturing the attention and wallets of China's massive consumer base. Even in the US, where Starbucks has long reigned supreme, the company is feeling the pressure. The price of a latte at Starbucks has risen by about 25% since 2020, making it increasingly difficult to justify the cost to consumers. Meanwhile, McDonald's, yes, McDonald's, has raised its coffee prices by over 40% in the same period and still remains cheaper than Starbucks. This price competition has forced Starbucks into an uncomfortable position, competing on value, a territory it has traditionally avoided. In 2024, Starbucks made a bold move by introducing a discounted pairings menu, a significant departure from their usual premium pricing strategy. But here's the catch. When customers are concerned about price, they are usually looking for lower base prices, not just deals on extras. Some analysts warn that Starbucks may be missing the mark, trying to fix a complex issue with simple solutions. Has Starbucks lost touch with what its customers really want? And more importantly, can it find a way to reconnect before it's too late? As if external competition weren't enough, Starbucks is also battling internal strife. Long-standing tensions with Workers United, a union representing some of its employees, have been a persistent thorn in the company's side. Under former CEO Howard Schultz, these tensions reached a boiling point. Schultz, who ended his third stint as CEO in March of 2023, left behind a legacy of both innovation and controversy. Starbucks has always prided itself on offering progressive benefits in the restaurant industry, like healthcare, tuition assistance, stock options, etc. But here's the twist. These benefits haven't always been extended to unionized stores due to legal restrictions. This has led to strikes, firings, and a tense atmosphere that even non-unionized employees can feel. On one hand, Starbucks must maintain its reputation as a forward-thinking employer. On the other, it faces the very real pressure of controlling costs and meeting investor expectations. And just when things couldn't get complicated, external factors are adding to the turmoil. Social media-driven boycotts sparked by Israel-Hamas conflict have spread like wildfire, hurting sales in key regions. These boycotts have impacted Starbucks' bottom line. The question is, how much more can Starbucks take? And what does this mean for its global brand reputation? Despite the mounting challenges, Starbucks isn't ready to give up. Starbucks recently fired their CEO, Laxman Narasimhan. This decision was made amidst declining sales and mounting pressure from activist investors. Narasimhan's departure was followed by the appointment of Brian Niccol, the former CEO of Chipotle Mexican Grill, as Starbucks' new CEO. Niccol's appointment was met with optimism from the investors, as he has a strong track record of success in the restaurant industry. It is also important to note that Starbucks still generated about $36 billion in net revenue last year and holds a commanding 26.5% market share of the US coffee and snack shop market. Starbucks isn't down for the count, at least not just yet. In fact, the company's third quarter earnings for 2024 were far better than some investors expected. But here's the kicker. Global sales from existing stores still declined by 3%. Even with new products and deals through its app, traffic hasn't improved as much as they have hoped. Starbucks is now streamlining for its in-store operations with the introduction of the Siren craft system. This includes new roles like a play caller to help manage busy times and a digital production manager to better handle orders. But is this enough to right the ship? The answer isn't clear-cut. It's also been reported that activist firm Elliott Investment Management is working with Starbucks to boost its stock price, This firm is known for its aggressive strategies and high expectations for returns. This partnership signals that Starbucks is serious about its turnaround, but it also raises questions about what sacrifices might be made to satisfy investors. Starbucks acknowledges the need to adapt to an increasing choosy customer base, but the million-dollar question remains: can these initiatives help Starbucks regain its footing after such a rocky start to 2024? And what will the company have to do to ensure it not only survives but thrives in an ever-changing market? Starbucks, once an unshakable force in the coffee world, now stands at a crossroads it never anticipated. The road ahead is steep, uncertain, and fraught with challenges. But if history has taught us anything, it's that this coffee giant won't go down without a fight. Can Starbucks claw its way back to the top, or is it on the brink of becoming just another brand that lost its magic? The next few months will be crucial. Will we witness a triumphant comeback or the slow fade of an icon? One thing is certain: this story is far from over, and the world will be watching closely to see how it unfolds.